Good morning, Hong Kong, and welcome back to another episode of Hong Kong Insurance 101. This week, we're going to be talking about a doctrine that applies equity to claim situations. It's known as contribution. If you've been following along with our exploration of the technical aspects of insurance over the last few months, then you will be aware that in recent weeks we've covered the following topics: understanding risks, what is an insurance contract, how agency arises in insurance, what is insurable interest, what is proximate cause, what is utmost good faith, and what is indemnity. All of these doctrines, or theories of insurance, are critical in the application and utility of your coverage. However, when it comes to the settlement of claims, this can be complicated by a number of factors. As we've seen, there are policy mechanisms which may see you, as the policyholder, receive less than full indemnity. Contribution impacts claims, but in a slightly different way. It is a claims-related doctrine of insurance that applies towards indemnity in which there has been a double insurance of the loss. Simply put, contribution implies when a policyholder has taken out two policies of insurance against the same risk. It is not beyond the realm of possibility that two or more policies can exist to cover the same peril or risk. This is to say that a policyholder or policyholders may have obtained multiple insurance products covering the same loss scenario. Let's say, for example, a husband and a wife each independently obtain insurance coverage on their car. This could be due to a miscommunication. The husband and the wife each assume that they were responsible for taking out the insurance on the vehicle, and so the car is covered by two comprehensive motor vehicle insurance policies. The car is worth, let's say, 100,000 Hong Kong dollars, and each policy covers the car for 100,000 Hong Kong dollars. If there is a loss, the policyholders would not receive $200,000 in cover. Instead, each insurer providing insurance for the vehicle will share in the $100,000 loss. Any one of the insurance underwriters covering the loss is bound to pay for the full settlement amount, and that would be due to the policyholder were no other policies in force. After settling the indemnity towards the policyholder, that insurer is then entitled to call upon the other insurers covering the risk to contribute towards the cost of the claim. It is important to note that where there are two or more insurers covering the same risks with the same insurable interest, contribution may occur on a similar but not equal basis. Where contribution does apply, the total sum of all the insurer's contribution towards the loss in question will be 100% of the insured loss. Each individual insurer may contribute an unequal amount towards the financial settlement of that loss, but as a policyholder, you will normally still receive the settlement up to your policy limit. The most critical factor in applying contribution towards a claim is establishing whether there are multiple policies covering a single risk and that all the policies are providing indemnity. As contribution only applies to indemnity products rather than benefit products, it does not influence specific product classes of insurance. Life insurance, for example, is generally considered to be a benefit product rather than an indemnity product. As such, if an individual dies while covered by two or more life insurance policies, then, in most cases, each policy must pay in full as the insurance is not subject to indemnity. With regards to the same insurable interest, this gets far more complicated. Suffice it to say that only policies activated under the same interests will apply towards contribution. In the case where multiple products exist covering a single risk, but with different principal interests, then another claims doctrine, the doctrine of subrogation, will normally apply. That's us for this week. We hope you have a happy and healthy weekend. Remember to like and subscribe to stay current with all our content as it comes out. And don't forget to ask CCW. We're simplifying your insurance.